Heard you can claim mileage from your company, but wondering how you actually do it? Well, watch on. As a business accountant, my team and I spend all day long helping business owners on their journey, and mileage and limited companies pops up a lot as a topic. I think we talked about it on other videos about business travel and the fact that, quite often these business journeys are tax deductible, but how do you actually go about claiming it? This idea of claiming it, how do you get the tax relief? How do you get the money back? How does it work? And that's what I want to talk about in this video. Now, before I do, if you like these type of videos, make sure to click the subscribe button and the bell below so you get notified whenever we release more just like this one. So let's remind ourselves, firstly, if you're listening to this, I'm presuming you're an owner of a small UK limited company. You're generally the owner, the shareholder, and you're the director. It's the majority of small businesses will have that in the UK, and that is you, and that's who I'm talking to. Because outside of that, some of these things are still relevant, but this is the main point of the video and the main people I want to talk to. So that's where we are. So on this then, you've got mileage that you can claim for using your own personal vehicle. So we're talking about that. We're talking about you've got a car, say, and you use it. So say you're a trade, you're a plumber or an electrician, and maybe your business owns a van and it runs the cost of the van, and that's sorted some other way. We're talking about your personal car. And for a lot of people, having the car inside the business is not tax efficient. So this is why you end up in this result where you're claiming business mileage. So let's say you're in this trade and you're using your awesome Mercedes or your Audi or whatever to go around and quote people. You don't want to be seen in the van, so you go out and quote. So you get a temporary place, and that journey therefore is going to be business travel, and you're in the majority of cases, and you're going to be able to claim it. We're going to talk about how you claim it and what the rates are in a sec. But that's the key thing to understand is, firstly, you've got to understand if you could claim the journey. Is it a business journey? And we've done other topics on that. I think we've done podcasts and we've done blogs on our website if you want to deep dive into that. But ultimately, you have to know it's a business journey first. So normal commuting to your place of work, like if you're employed, it's the same. You don't get a tax deduction. A normal employee doesn't get a tax deduction for going to their place of work. You, as an owner of your limited company, if you're renting an office, wouldn't get the travel from home to the office. But if you went from the office to go meet a client at their office, that's likely a business journey and tax deductible. So they're the ones we're talking about when we're talking about claiming mileage. So then there's sort of 4 to 5 steps I want to talk of on this. So step 1, you've got to log the mileage somehow. So you can do that as old-fashioned as a pen and a pad and literally write it down. Some people still do that. They keep it in the glove box of the car, write it down when they've been to those temporary workplaces. So if that works for you, that's completely fine. We'll talk about how to get into that in your records later, but that's kind of the records. Some of the accounting apps will do it. So there's Xero and there's QuickBooks, for example. They're the two leaders in the market as far as I'm concerned, where you'll get the best experience doing this, but they have different things you can do with those. So Xero have a way that you can turn on an expenses module and it will track it for you. QuickBooks, it's kind of native, it's part of the product at the time recording the video, but you can log it in there. Both those still need some extra process on top of it, which I'll touch on later. So you've still got to do something with it, but some of those will turn on like automatic journey tracking, for example, using kind of like GPS technology. So they're options. You can also get some very specific mileage apps. They're literally designed to track your mileage and your journeys. So by all means, use tech. Love a good bit of tech. Those options are out there, but it really doesn't matter because there are lots of different ways, as we're going to talk about, in terms of entering it, where you can enter it regularly, but there's also nothing stopping you entering it once a year if you really wanted to, and we'll talk about that as well. I think the main thing to keep in that record, though, is a reason why you went on those journeys. Who did you go see? What did you do? So if you ever got a revenue inspection, they wanted you to justify why you claimed that mileage, then you can say, well, this is my journey log. Here's how many I did. This is where I went and how I calculated it. Now, in terms then of what you can claim in the rates, currently at the time recording the video, you can claim 45p for the first 10,000 miles that you do in a tax year, and then 25p thereafter. And I say in a tax year, that's really important because your limited company can have a different year end to the personal tax year. So you could be in that space where your company year ends September, but we're talking about tracking the mileages as you do between the 6th of April one year and the 5th of April the next year. So really do bear that in mind. And some of these apps will help you deal with that anyway, but just so you know, that's where the line's drawn and where it resets. Now, those rates used to sound amazing, but they haven't changed for years. So with the price of fuel and everything being what it is, they don't actually sound that generous. But go back, say, 10 years ago, that was a really good rate. And the reason it's set at that rate, and in theory it should still be more than your petrol, is because it's meant to account for the fact that there's depreciation on the car you're driving, wear and tear on the car, repairs, insurance, all those things that went into you being able to put that car on the road should form part of the mileage rate. So that's where it comes from and why they set it. It's just not moved for many years. They absolutely should raise the rate. It's a silly idea, I think, to be this low, and I think people have talked about it, but there's just not enough political will, it seems, to sort it out. But anyway, at the time of the video, they're the rates. Then the third step to actually claiming it is to enter it into your records. So if you've got a spreadsheet, you're going to enter in that mileage cost at 45p. So if you've done a load of miles and the claim's £450 at your 45p a mile, then you're going to enter £455 for mileage owed to you as the director. Now, if you're doing it in software, which I'm hoping you are if you're a limited company, then there's a couple of ways of doing it. You can either do it through the apps, and you'll go in normally and categorize those journeys. So I'll share some shots with you in the video, but you'll be able to see, you might need to go in and just categorize it in the app to say, yeah, it was a business journey, or, these are the reasons I did it. The apps work slightly differently. And if you've got an app that's not the accounting software, so it's not like a Xero or QuickBooks and sort of tracking it inside those apps, you've got to do the other option, which is to key it in manually. And there's a couple of ways of doing that. So normally in these apps, if you do those kind of tracking, they'll appear as like an expense or a bill or something like that for you to deal with. Now, if you're keying it on manually, one of the ways you could do it is via what's known as a journal entry. Now, us accountants love journal entries. They're kind of like an easy way to input data into the books without having to do something. So you could do that, and I'm going to share a little example of that with you. It's a little bit accountancy, so apologies for that, but this is a nice quick way of doing it, because you could simply just once a year enter this. And the way this works is that you're going to enter it, and this one I'm showing you now, this journal as it's known, basically says, look, that's what it's cost the company in mileage, because it's going to pay me that money, whether it's now or later. And the other side of it, in this example, I've stuck to what's known as the director's loan account. And we've done quite a few videos on director's loan accounts, but it's basically saying in the accounts, look, this money is owed back to you as a director. If you subsequently, literally, as you key that in, you've gone in and paid yourself the money, that's fine, because it could be represented in multiple ways, but that's normally the way you would do it. You'd put it to this director's loan account. If you didn't, if you literally paid yourself exactly, so let's say, I don't know, it was £450 and you paid yourself exactly £450 out on that day, and you had an app like a QuickBooks or a Xero, you could literally just put that to mileage and put a little bit of details in there. You wouldn't need this journal thing. The same as if you've done like a bill or an expense that's sitting there, but you might still have to tell it what to do with that. And then you might use those director's loans again. And that one's a bit more complex to explain in the video, but ultimately you're going to earmark it down as I'm due to be paid that later. So if you think about it, if you're going to get paid it back later, you're likely to use that director's loan thing. If you're going to pay yourself a round sum figure that includes some mileage, you're likely to use that director's loan thing. But if you're paying yourself exactly to the pence that you don't have to, you could just literally pay it from your bank and pay yourself the money. Now, when we're talking about the bank, and this is really one of the key points for this, is when you're claiming the mileage, what you're really doing is you're saying in the books, there's a cost here, I want to pay myself the money back. The company generally gets a tax deduction on that mileage and that amount, so that's great. That's reducing your tax bill. But what we're not doing, unless your client or your customer's actually paying you that back, so using the tradesman example, you're not likely to charge to quote and the mileage to go and quote. You might do, there are the rare occasions, I'm sure, but generally that's not going to be the case. So they're not going to pay you any extra money. So this money you're paying yourself is still coming out of the company's money. And I know you might think, well, that's really obvious, but the amount of clients that we've worked with over the years and the amount of owners where they didn't quite understand that, they just thought this mileage was free money. If it's £450 of tax deductible mileage, it's going to be free £450. Doesn't quite work like that. And if you're struggling to picture it, we did a video on tax deductions and how they work where I explain this in a bit more detail. But yes, it's not free money, but it is definitely helping your tax bill. So it is creating a little bit of extra money in the business, but not the full amount of the mileage. But if you've entered it in the books and then you've either put it to your director's loan account or you physically paid it, that's you claiming it. It's going to go in your accounts, it's reducing your profit. And if you're paying yourself it back, you'll definitely feel that idea that it's going to be claimed. You don't have to, because that debt is increasing to you later when you do want to take the money back. So let's say you just want to keep all the money in the business and maybe just draw it out later. That money is there for you when you want to do it. And because you've declared it in that point as your tax deductible mileage, when you pull that money out for exactly that mileage value, it's not likely to have a tax bill associated with it personally. So it's a really good way of making sure that, yeah, you draw the money that you're owed out of the business. So quick recap then. So you want to log your miles somehow, app, paper, whatever. You want to calculate the claim based on those miles. Then you want to key it into your records, whether that's a spreadsheet, whether you actually put it into your software. And again, the software can be done in multiple ways. You could either use the app's various features to enter bills or expenses, or you could do this journal thing. And again, you don't have to do that. regularly. You could literally do it once a year if you wanted, or sometimes it's nice to do around the tax year, because then in your head you know wherever you are with that 10,000 miles if you're anywhere near that limit, so that's good. And then you can decide whether to repay it to yourself, knowing that it's not entirely free money. Hopefully you've enjoyed this video. If you do, please do share it with somebody that needs to know this info, and I'll see you in the next one.